Well, I'm out of Bitcoin for now with huge profit, but I've got a plan to get back in. Plus, we're going to look at Palladium and the Canadian dollar Swiss franc. Don't change that dial. Hi, this is Tim from TradingStrategyGuides.com. Today we're checking out a bear flag on Palladium and an ascending triangle on the Canadian Swissy. Plus, I've got a plan for more Bitcoin profits. We're going to look at those, but first we'll check out the active trades and later on this week's trading maxim. We made it halfway through January, can you believe it? And we're still alive. Happy Monday. Let's take a look at our active trades. Well, Bitcoin pulled back right here on Monday and hit my stop at 3674.22 for a profit of 93.4182 on the second half and a 6.7% overall account gain on this trade. So, not too shabby. Bitcoin is very volatile right now, so now's the time to make money on it. So let's take a look at my plan to get back in. So, BTC is taking a breath from the huge move from 20,000 up to 42,000 and making a possible descending triangle right here. So it's looking kind of bearish. But remember, trade what you see, not what you think. Right now, my plan is to sell a daily candle close below the descending triangle or below 30,000 with all the usual trade management amenities. 1 ATR first target, close half and move the stop to break even. 1.5 ATR stop loss and close the trade if a candle closes back in the triangle. Now, you know a descending triangle is bearish and I will only take a sell signal. But if this pushes back up above my triangle and attacks this 42,000 level again, that will totally negate this descending triangle and change the whole outlook. At that point, we'll have a plan B. I will look for a candle close below the 30,000 level to sell, or I will look for a candle close above the 42,000 level to buy. Now, don't be in too big a rush to buy Bitcoin. It's totally been on a tear since October and has to take a breath. So be sure you have a good candle close above 42,000 before you buy it, and be prepared to dump it if it drops back into the range during Plan B. Okay, so this is a two-part setup. I'll watch for the sell signal below the descending triangle, but if it negates the triangle by pushing above it and attacks the 42,000 level, the plan will change to a trading range plan. Got it? Okay. Moving on to the New Zealand Swissy. As you know, I avoided shutting this one down on the 11th right here, but it was pushing back down into the range again right here on the 13th. So I finally just said uncle, and I shut this thing down. 41 pip loss on this for a 1% account loss, and I'm done with the Kiwi Swissy for now. Nat gas is riding right down this bull flag right here, so I suspect we will see this thing pop soon, hopefully hit our first target. I'm still in this. Canadian dollar, Japanese yen just barely pushed above the range right here on Thursday with small volume, less than average. So I bought half size, and Friday it dropped right down here and hit our stop. So 1% account loss on this, 77 pip loss, and I'm done with the Canadian yen for now. And that's it for the active trades for today. Let's take a look at today's trade picks. Today we're looking at a bear flag on Palladium. Just to be sure everyone understands, a proper bear flag consists of an incoming downtrend like this one here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR. And here's the trade plan. we're going to sell a daily candle close below the bear flag. On the breaking candle, to enter a full-size position, we want to see the volume bar reach up to the volume average. If it doesn't quite reach the average, but does reach at least 75% of the average, I'll open a half-size position to reduce risk. You can calculate that percentage by dividing this volume by this volume average. You should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. The stop loss is 1.5 times the ATR. The first target is 1 times the ATR. So on the day this thing breaks, we get a close down here, and just ahead of the close, we set up our sell order, and we look at the ATR right here, multiply this by 1.5, and we'll measure that distance above the entry for our stop loss, and we'll measure 1 ATR below the entry for our first target. Wow, that's a mess, isn't it? If after entering the trade we get a candle that closes back inside the flag, we'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If it does not and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I will only risk about 2% of my account on each trade. And that's today's setup on Palladium. Next, we have an ascending triangle on the Canadian dollar Swiss franc forex pair. An ascending triangle consists of a strong resistance level like this one here at 70.35, with several historical touches or approaches of the line, and a series of higher lows as fewer and fewer traders are thinking about taking this short. Each time the price gets back up to the resistance level, it chips away at sell orders until it finally breaks through. It should break out of the pattern with strong momentum. The ascending triangle is a bullish pattern, and I will only take a buy signal from it. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility, like you see right here. I measure the volatility using the ATR, or average true range. And here's the trade plan. We're going to buy a daily candle close above the triangle or above 70.35. I'm not going to bore you with the whole spiel again. The management details are always the same. If there's at least average volume, enter a full-size position. If there's only 75% volume, enter a half-size position. Otherwise, stand aside. Stop loss is 1.5 times the ATR. The first target is 1 times the ATR. If you get a candle close back in the triangle after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. 2% risk on this trade. And that's today's setup on the Canadian dollar Swiss franc forex currency pair. Okay guys, that's how I manage these trades. You do you, okay? Make sure you understand what you're comfortable with and trade it that way. And one way that I keep my head screwed on straight during all this is the trading maxims. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools help you maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 15. It is possible to commit no mistakes and still lose. That is not a weakness, that is life. And that's a quote from Captain Jean-Luc Picard. Okay, I know I'm flying my geek flag right now. For those who don't know, Captain Jean-Luc Picard is the captain of the Enterprise in Star Trek: The Next Generation. He was talking to Data, who is an android wanting to be human so bad he can taste it. Data thought perfection was necessary in his humanness, but still felt he failed. Picard was pointing out to him that mistakes are just a part of life. So, to ungeek this a bit and bring it around to trading, it's possible to execute your trade plan right on target and still lose the trade. When I was a newbie, I thought I was doing something wrong when I lost a trade. But I'm here to tell you that you will win trades and you'll lose trades and it will have absolutely nothing to do with the perfection with which you execute your plan. Trading is about probabilities, and the probability of winning a trade is never 100%. That's not a weakness, that's life. Remember our Palladium trade plan for today. We're going to sell a daily candle close below the bear flag. And our Canadian dollar Swiss franc trade plan for today, we're going to buy a daily candle close above the triangle or above 70.35. For both trades, take a full-size position if you've got average volume or better, half size if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. Don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box. And that's it for today's video. Come back Wednesday for the next installment of the Trading Education series. This time we'll talk about the RSI indicator. Be here Friday for my strategy of the week and next Monday for my trade picks. My videos come out at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you on Wednesday.